It's Thursday, November 8th. Welcome to Market Foolery. I'm Chris Hill, and joining me in studio today from Motley Fool Options, Jim Gillies, and from Motley Fool One, Jason Moser. We're wrapping up Canada Week with Jim Gillies.
As long as we don't talk about hockey today, I just don't really have much to offer there.
We're not going to talk about hockey, although I was remiss because on Tuesday we talked about, Bill Barker was in here, we talked about the election. We played a couple of clips from Nate Silver, and I was remiss in yesterday's podcast when I did not mention the prediction that our producer Mac Greer made on Tuesday. His prediction was the election is going to be called at 10:48 at night, and Mac was like off by 20 minutes.
Yeah, that was very close.
He was really close. So again, if you had your money down, if you're rolling with Mac, you're rolling large. We've got
Mac.
We got earnings from Whole Foods, from Activision Blizzard. We are going to start, however, with McDonald's, because for the first time in nearly a decade, McDonald's monthly sales fell. Jason, it was down nearly 2% in the month of October. We're talking about same-store sales, so these are locations. These are not new locations. These are ones they've been open for at least a year. How big a red flag is this?
I wish I could say it was a red flag, but unfortunately, it's not really. I mean, sales go up, sales go down. I mean, it's not like McDonald's is in any real pinch here, considering the scale of the operation. But I think it is worth noting, we talked about this before, where watching same-store sales drop, particularly in the U.S., for example, where I think last quarter, same-store sales were clocked in at about 4.5%, and this year was around 1.4%. And that's concerning when you consider the fact that McDonald's is making investments in their U.S. operations to sort of bring themselves more on par with the fast casual style restaurants like a Panera or a Chipotle or even a Starbucks to that degree. So it kind of shows me that maybe those investments aren't necessarily paying off. I mean, at the end of the day, it is McDonald's. And they don't necessarily offer the healthiest menu in the world. That said, they're trying to offer more. I do think it's worth noting that McDonald's makes about 60% of their operating profit outside of the U.S. And so when you see a lot of the same-store sales dropping in other locations like we're seeing in Europe, no shocker there. Asia, a little surprising, given their exposure to their money making operations out there. That could be something to keep an eye on.
Jim, what do you think?
Well, and I also don't know if there was any currency impact in this as well, because the U.S. dollar has been pretty strong against other currencies in the world where it might be dropping. But my big fear, I suppose, to put the air quotes around it maybe, is that someone would actually consider this a data point worthy of an investing decision, because it is absolutely not. I mean, the fact that this was the first same-store sales drop in a month, big deal
in almost a decade.
Well, right, and this was expected. I mean, the consensus expectation was it was going to be down about 1.1%. It came in 1.8%. Who cares? Seriously, it's 1 month. After 10 years nearly of going up every month, it's no big deal. And my concern would be people would look at this and say, "Oh, maybe McDonald's has lost its mojo. We should sell." No, I mean it's kind of a theme from yesterday. This is an add more on a long-term holding. It's a great business. It's fine.
Yeah, I totally agree. I mean, if anything, I look at that as a buying opportunity. But I mean, you also look at other operations like Burger King and Wendy's, and all these other fast food restaurants are also revamping their menus and trying to sort of reinvent themselves. And I mean, you can't watch anything on TV without seeing one of those stupid Wendy's commercials. But
How do you really
what
feel
that
about
means
Wendy's,
is that brings more people out there to try something like a Wendy's or a Burger King, which may take some traffic away from McDonald's. But McDonald's is one of those things you know what you're getting. It's got obviously the golden arches are unmistakable. Like Jim said, this is just one data point of many.
If you have kids, and I have kids, they like their McDonald's.
Yes.
Activision Blizzard's third quarter profits came in higher than expected. The video game maker also raised guidance. Jim, what's the headline for their quarter?
I think the headline for the quarter is once again they hit it out of the park, did a great job, and the market has just shrugged and doesn't care.
I was going to say,
that's about 4 years running now. It is run the range from an $11 stock to a $12 stock.
It's really amazing to look at.
It really is amazing,
particularly when you factor in that this is not really a below the radar company
No.
in terms of what they make, in terms of the games that they make. They're very well known.
They're very well known. They're very profitable. I mean, the Call of Duty franchise, puts out generates the amount of revenue and cash flow that a major Hollywood blockbuster, like we're talking on a Harry Potter level,
Right.
can bring out. And they seem to be bringing one of these out per year and doing well. I mean, I think this is Black Ops 2 coming out, their Call of Duty offering this year in about a week. The last, I think it's 3 successive years, they've each had a Call of Duty, of Modern Warfare 2, Black Ops 1, Modern Warfare 3. Each one of them has successively set records for these types of things. And, the company does pretty much everything right. They make lots of cash. They redeploy that cash in the service of shareholders via meaningful share repurchases and dividends. And for various reasons, it seems like the market is always looking over its shoulder for this is going to be a problem coming down the pipe, and it just shrugs.
Well, why do you think that is, though? Because
Couple reasons. Number one, about 2/3 of the shares are owned by Vivendi, so there's a big dominant shareholder control overhang. For a while there, it looked like Vivendi was going to try to sell their stake. Quickly found out that no one was willing to pay their $7 billion up there. As well, that there's always the fear that the franchises that generate so much of their cash and so much of the revenue are going to go away. About 4 years ago, one of their dominant franchises was Guitar Hero.
Mm-hmm.
When was the last time you played Guitar Hero?
Well, I've never played it,
Okay.
so I'm the wrong guy to ask.
Well, I mean, Guitar gone today. So people fear that Call of Duty as a franchise will wane, and a management saying things like it's one of the top consumer recognition brands, if you will, on par with Starbucks or Nike. And even I sit back and go, and I own shares of Activision Blizzard. I like the company. But, I'm sitting there going, well, I'm pretty sure Starbucks coffee or Nike, Air Jordans probably have a bit more staying power than the latest, first-person shooter. And then as well, too, they get a lot of their money from their monthly kind of subscription games, World of Warcraft. And there's always the fear that the subscriber counts are falling. And subscriber counts have been falling for World of Warcraft in aggregate for the last year or so.
Yeah, Jason, to one of the points that Jim made, whether it is Activision Blizzard or Electronic Arts or Take-Two Interactive or even a company who's in a different kind of gaming business like Zynga, what they all have in common, they are all dependent on hits.
Yeah.
And so, I mean, this is sort of a common, maybe not a threat, but certainly a common concern amongst all these stocks.
And rightfully so. I mean, they are dependent on hits. And I mean, to Jim's point there about Guitar Hero, I mean, there is a substitute for Guitar Hero. It's called a guitar. And so, I play guitar and consequently never play Guitar Hero. The substitute for Call of Duty is you go and join the military. And
I was wondering where you're going to go with that.
A little bit less likely to do something like that. So I think that's a testament to why something like Call of Duty has such staying power. Now, with something like World of Warcraft, yeah, they have been seeing declining subscriptions. Now, it's worth noting that this past quarter, they did see their subscribing members actually tick back up from 9 million to about 10 million.
Yep.
The company is doing a lot of great things with their digital distribution, operating margin expansion is becoming more profitable. I always say with this company, the market just continues to judge this company on what it has not done yet. Because, what if the coffers run dry and they don't come up with the next hit? The thing is, they keep on coming up with great hits, and Skylanders is another great example of that. Just talking yesterday with Alex Scherer, who's in the office for a couple of days, and he was mentioning that at least one of his boys big into the Skylanders characters, and that's sort of a mixing of the video game with the actual physical toy,
right,
which is pretty cool. So I even remember last year when people, on the calls with Activision Blizzard were noting Zynga entering the fray, and wasn't Zynga going to eat Activision Blizzard's lunch because mobile was the wave of the future, and Kotick was like, yeah, well maybe, but looking at Zynga's model, we're not really sure how they make money and how they're going to be able to make money, and we see now that they don't really make money, and we're not sure if they'll last, but it's a difficult industry, and I think that Activision Blizzard it really is the only gaming company I would consider investing in because of its scale and the attractive position that they offer to producers and game makers everywhere.
What do you, just to wrap up on the stock, Jim, when you look at it trading within this narrow sort of $10 to $13 range as it has literally for years,
yes,
What do you think of shares today? Do they represent any kind of discount or deep value?
Can I go off into the options tangent?
Absolutely.
Absolutely.
Encourage it.
What's been interesting for me is we've had an option position on this for, I think, 3 years now in Motley Fool options. And the option position has been an unabashedly bullish position. It's called a synthetic long. And so this position has made nothing. And if you had told me 3 years ago when we established the position that this would have made a better covered call. A covered call is a type of position that makes money with a stock that goes nowhere, given the cash dynamics, given the quality management, given the hit after hit after hit that these guys have, given their steady whittling down of their share base because they buy back so many shares, I wouldn't have believed you that it would have been a better candidate for a go nowhere strategy. And it has. The price is cheap. The price has been cheap for 4 years. I'm not sure what it's going to take for it to catalyze and go up $3-4.
One other point, just note on that price is that now when you look at that $11.50 share price, about 25% of that is cash on the balance sheet.
Yeah.
Wow.
So you're looking at it. I mean, it trades
Unencumbered
very cheap.
by debt.
Exactly.
I mean, they have no debt.
And so it is cheap on paper. It certainly hasn't done anything, but I own stock in Activision Blizzard personally. I carry it in my real money portfolio here. It is one of many positions. I think it has a little bit of that coiled spring sort of look to it, where one day I have to believe that the market's going to wake up and the price is going to reflect the cash this company
or
generates.
we'll wake up and it's been acquired and suddenly it's $17 and we're out. And
that's
we're getting
a
a
good point.
dividend to wait. So.
Yep.
Shares of Whole Foods down more than 3% this morning after fourth quarter earnings came in basically in line with analysts' expectations. Jason, is this a situation where Whole Foods, which has been on a tear for a while now, is the fact that it's like, oh, you're just doing exactly what we thought. We were kind of hoping you were going to beat expectations.
How
was
dare
that
you just be
basically
awesome?
Yeah.
Right, exactly. Yeah, that's a great example of a company that can sometimes be a victim of its own success. They keep on killing it quarter after quarter after quarter. This quarter, it was another great quarter. I mean, comps are up 8.5%. Sales just continue to rise, and Mackey said on the call it was their best year of the company's 32-year history. With that said, I think the look forward for 2013. It's maybe the growth is moderating a little bit. The stock certainly wasn't cheap at 40+ times earnings, and you were talking about a grocer here. So I mean that is a razor thin margin business to begin with. Looking really at the high end consumer market. So yeah, I mean the share price is bound to pull back a little bit, but it's still a very quality company and still a positive outlook.
Yeah, I think maybe some of the pessimism that might be out there is I believe new stores, the sales per square foot is significantly smaller or lower, I should say, than the more legacy stores.
Mm-hmm.
If that persists, that could be a problem because obviously you're rolling out new stores at a lower ROIC. Now, hopefully, of course, that over time, as the stores season or mature, sales per square foot goes up. They also jacked their dividend, I think, by 40 or 50%.
43%.
Yeah, I mean, again, that's great to have. Big. You lose 3% today on whatever.
Yeah.
Just on the store count, Jason, I think we were talking last week about Starbucks. One of the things from Starbucks' latest quarter was that when they look ahead to 2013, they're planning to open 1,300 new locations, which struck me as a longtime shareholder as a somewhat aggressive number. Did Mackey say anything about Whole Foods and their plans to expand? I'm just wondering, when they look ahead, whether it's 2013 or 2014 or beyond, what is their growth outlook? Obviously, it's not going to be anywhere near what Starbucks is. That's a little bit of an apples and oranges comparison there. But I am curious about their expansion plans.
Yeah, so I mean that 1,300 number for Starbucks can sound pretty lofty, but we also have to remember that is globally speaking, and they are really focused on almost hyper growth in China and India. So that represents a lot of what they're trying to do. With Whole Foods, yeah, they have about 340 stores open now. They see a long-term market that could hold about 1,000 stores domestically, but they are very good at moderate, deliberate growth. They try to make sure they don't open stores in areas where they may underperform so that they have to close them later. So, whether they open 10 to 20 to 30 new stores over the course of the next year, we'll kind of see how they plan that out. They lay it out quarter by quarter. I mean, typically, we see anywhere from 10 to 20 stores mentioned every quarter. But again, it's going to be slow, deliberate growth so that they can avoid having to close any underperformers later on. And I think shareholders really need to take that into consideration because we have a company here that again, they're very shareholder friendly, return a lot of value. They're not looking to bite off more than they can chew, I don't think, which is good.
In terms of something to watch over the next year, if it's not the store count, because I get everything you just said, and obviously they're not in the same hyper growth mode that you mentioned that Starbucks is in. Is the thing to watch instead what you were talking about, Jim, this whole notion of looking at the newer stores and seeing if they can get their revenue per square foot, get that to go higher? Is that sort of the key metric to watch?
That would be. I think that's something to watch. I think it's a metric because if you're looking forward, and if the market starts, believing that future stores are going to suffer on a sales per square foot basis going forward, yeah, I mean that could be a problem because you start having to open stores that are just less and less efficient. That said, I think right now I certainly don't want to wave any panic flags or anything like that. It's just something to watch.
Yeah, I think I'd probably focus on the margin lines in particular. They talked before about how gross margins, they saw a long-term sustainable number of around 35%, which they reached this quarter and year, which means that going forward, any real profitability and savings are going to have to be incurred on the operating and net margin lines. And so I'd be paying attention to those three margin lines and seeing how it all trickles down to the bottom.
We're 2 weeks away from Thanksgiving here in the United States. Jim, we were talking before we started tasting.
Yes.
Canadian Thanksgiving is in.
We're done.
Is in October. Yeah, you've had
already
yours.
given.
We ate all the best turkeys.
What's what's sort of your go-to when you think about Thanksgiving? Because when I was driving my kids to school this morning, we were talking about, we're gonna fly up to Boston for Thanksgiving. We're gonna see our
I'm going to be in
cousins.
Boston for Thanksgiving, I think.
Come on by.
Yeah, there you go.
Come on by. There's always room for more. And we were talking about the foods that we are looking forward to at Thanksgiving. I'm just curious, what's your food that, when it comes to Thanksgiving, you're like, this is what I want on my plate?
See, I cook Thanksgiving dinner. I'm the one that does all the cooking. Well, I kind of have to.
So for you, it's just a bottle of wine in the kitchen.
Yeah, no. My parents come over and some friends and what have you. I'm not married, so it's my it's kind of just certain friends, my kids, and my parents are over. But for me, I do the cooking, and it's generally. I take about 4 days to properly prepare the turkey.
Wow!
It's got to brine properly, and then a salt crust, salt brine in the fridge, and just air dry, and then I generally serve that with caramelized onions, cranberry sauce.
Next October, man, we're flying.
So come on up.
We're flying up to Guelph for that. That sounds good. What about you?
Yeah, like Jim, I do a lot of the cooking in our house. Now, I am married, but I think it's because I'm a better cook. But
hang on.
It's all right. My wife doesn't listen to this anyway.
Okay.
She would agree, though, I think. But she's a great cook. No, don't get me wrong. She's a wonderful cook. But we do cook a lot of our Thanksgiving dinners together. And, growing up, one thing I always really enjoyed, I grew up in Charleston, South Carolina. My grandmother on my mother's side had peanut butter stuffing, which was just really good. I mean, I'm a big peanut butter fan. I'm unabashed peanut butter lover. And this is just essentially stuffing, and you're just throwing in a good, healthy dollop of peanut butter with it. And you put that puppy inside the turkey. It is really good.
I am salivating over here.
It's really
Can I get
good.
that recipe?
It's just stuffing, and you add peanut butter to taste, however much you want.
I want that.
It's really good.
Sounds good.
For me, it's stuffing. It's not peanut butter stuffing. It's sort of a sausage base, but that is
sausage and peanut butter.
Drop us an
what
email.
What could go wrong?
radio@fool.com. If you want Jason's peanut butter stuffing recipe, we'll see if we can get it for you. But we always like to know what people are looking forward to in terms of Thanksgiving, whether they celebrate it here or elsewhere around the world. Jason Moser, Jim Gillies, good luck getting back over the border into Canada. Thanks for being here.
Thanks.
As always, people on the program may have interest in the stocks they talk about, and the Motley Fool may have formal recommendations for or against. So don't buy or sell stocks based solely on what you hear. That's it for this edition of Market Foolery. Our producer is Matt Greer. I'm Chris Hill. Thanks for listening. We'll see you next week.